Indranil Sengupta, economist, head of research at CLSA, joins in to walk us through his expectations. Indranil, good to have you on board. As per our ET Now poll, it seems like a majority, 100%, is going for a no change in rates. What is it that you're working with?
So thank you for having me. We are looking at a pause as well on Thursday, and then a cut from October onwards.
Is of a pause, but the governor last time refrained from calling that pause a pivot. But do you think that's pretty much the case? And going forward, what's your expectation for rate cuts? Probably you see it happening at the end of this year, starting of next year?
No, from October, like I said, the rate cuts from October. Look, the RBI's rate policy right now hinges on two factors. One is whether an El Nino hits, which looks increasingly likely, and that may push up inflation. So maybe the first cut will be in December rather than October. We have to wait and see how the rains pan out. Number two, it depends on what the Fed does. So our base case is that the Fed goes on a long pause. If that happens, I think the RBI can start to cut by October. But if inflation, core inflation in particular, persists at 0.4 month on month, which is like 5% year on year, then maybe the Fed will have to act, in which case the RBI will have to act. But assuming a base case of still normal rains and the Fed pausing at 5 quarter, we think that the RBI can start cutting from October.
October, that's the time you will expect the rate cuts to happen. But apart from the rate action, what are you expecting to hear from the governor come tomorrow with respect to the growth estimates changing, any commentary in inflation or change of the stance?
So I think it will be, pretty much like last time, reasonably cautious given the sort of uncertainties that are all around us. So I think it will be, fairly a cautious policy.
Okay, what's the outlook in terms of the Capex cycle pickup as well in India? Do you believe that we are likely to see a meaningful pickup? Are we seeing signs of that already?
I think that, given that growth is, still below potential on an average basis, the Capex cycle is some time off away. So, the government is obviously spending, but for the private sector to come in, you require, a far, higher degree of certainty about the economy as about capital utilization.
Are fears of a recession in the US, are they justified, and what do you believe would be the implications of that across the globe?
So I think that, as rates go up, growth in the US should be slowing. So we are looking at weaker growth in the US and in Europe because that's how inflation comes down, right? I mean, you push up rates, you bring down growth and then demand, and then inflation comes off. So I would think that if the US were to enter a period of very low growth or a recession, it will cost us about 100 basis points of GDP in India.
Okay, fair enough. What about the outlook in terms of the kind of global inflation that we've seen? Because that has come off, no doubt, but are you worried about global inflation continuing to linger at higher levels? Is 3% in the US perhaps the new 2?
I doubt, because, if you look at US potential growth, it is somewhere around 2%. And, how can you have inflation above your potential? Like in India, if you say that, okay, potential is 2%, I'm sorry, 6%. I mean, will you want to have inflation at 9%? So I doubt whether the US can live with the 3% inflation you're talking about, because then that will come back to hurt growth.
Okay, so that will come back to hurt growth probably. But with respect to how the rupee and the tenure has been moving, any sense, Indranil, that you would want to give in terms of what's your expectation of the trajectory of INR as well as tenure going forward?
So INR, we are looking at 79 by March. Right now, obviously it's weak seasonality. But then once the US is done, we think that, you will see the dollar depreciate and the rupee appreciate. So we're looking at 79 on the dollar. Coming to the Indian tenure, we are looking at 7%. It's actually hit 7%. Yes, the fiscal deficit is high, but then I think the RBI will be able to do a large amount of open market operations as we go forward. Uh, if Capex, FX flows are, relatively muted, and then, like I said, that at some stage, the RBI will cut rates, which I think is already being built in to the bond market. So 79 to the dollar on the rupee and 7% on the 10-year.
Okay, point taken as far as the rupee and tenure is concerned. But we were just speaking with Rhythm Desai as well a little while ago, and he was talking about how Capex is picking up not only at the government end of things, but also the private Capex. Do you have any more insights to offer in terms of what you are seeing the momentum on ground with respect to the Capex that the government is doing, and the ahead of the elections, is there any material change that you're expecting in that?
No, not really. I mean, like I said, that we think that government capex is happening, but private capex will take some time.
So private capex will still take some more time. So that's the word coming in from Indranil Sengupta, expecting a pause at this point of time and probably a cut coming in from October onwards. Indranil, thank you so much for joining us today and talking to us about your expectations of the policy.